prediction is in just a couple of years, 2028, unemployment rising to over 10%, triggered largely by layoffs as AI just becomes more and more ingrained in all facets of business and life.
Welcome to the Wellable Weekly Podcast, where we cover key topics and trends at the intersection of well-being, HR, and technology. I'm Nick. I'm with my good friend, Geoff. Geoff, how's it going?
It's going great, Nick.
Big news story this week in a lot of different ways, from geopolitical stuff to technology. I think the one that we will focus on is this report from this hedge fund called Citrini. What I found was really interesting about the report is that they didn't write it in the sense of a traditional report, in the sense of these are all the data points we're looking at, and this is our prediction for the future. They wrote it as this fictional post-mortem. So it's dated June 2028, so a little bit more than 2 years in the future. And they are talking about a future that exists, and they're saying, well, how do we get here, right? And as you can imagine, a huge piece of that economic history for how we got there is a narrative around AI and what companies were doing with AI and how it resulted in certain workforce changes and consumer changes and things like that.
Yeah, absolutely. I mean, interesting your report, right? Citrini's not a household name, I don't think, and not one that I had heard of at least. Hopefully they were short software technology stocks, because the fallout from this was definitely another pullback in U.S. Software stocks. But like you said, the way they wrote it was almost as if, again, this had already happened, and now it was more of a retrospective. And the picture that they paint is pretty grim for a report that is effectively a forecast of just a couple of years out, right? So I think that in of itself, is probably adding to the market spook that we're seeing. But effectively, the prediction is in just a couple of years, 2028, unemployment rising to over 10%, triggered largely by layoffs as AI just becomes more and more ingrained in all facets of business and life. So what happens to those software companies, right, is that, as we have seen a little bit already, they're trimming headcount and just relying more and more on AI capabilities to improve their efficiency, their output, and because of that, you just need fewer workers and fewer white-collar workers specifically, right? So the outcome of that is that you have fewer and fewer white-collar workers at these software companies that were once the real lifeblood of the stock market, at least, right? And because you're able to trim headcount while maintaining, or in some cases, growing output, the net impact on the economy as a whole, which is not the stock market, right? But the economy as a whole, as measured by GDP and other things, is actually relatively healthy, right? But you have this entire area of a workforce that is just potentially going to be decimated in a way that many of those individuals who are going into jobs that were once seen as really desirable and kind of future-proof because of all the things and opportunities that come along with them are now in a situation where they are being displaced, but because of in some cases the technologies that they really help to create and integrate.
Exactly. I mean, one of the other things I really liked about the report was it was written with all these kind of, I think, buzzy terms that are now going to become kind of maybe into our pop culture, business culture, right? So this idea of ghost GDP, like you mentioned, GDP as a measure of our economy strength could be really good, but other measures of our economy strength, like employment, could be really bad. Or it could be the gains that GDP come at extreme cost to a small but growing number of individuals. And another term they threw out that, or coined, that I thought was interesting was what's called the intelligence displacement spiral, right? Which I think is what you were trying to talk about.
Of course.
Yeah, IDS, yeah, exactly. Now it's going to have its own acronym and all that stuff. And it's just like a doom loop, right? It's a doom spiral. And these employees, get laid off because of AI gains, and that results in a weaker consumer and so forth. And I just found that to be really fascinating. And whether it's going to happen or not, it's like very believable. Like it's the
Mm.
narrative that they wrote was something, at least for me, I was like, okay, I can see how we get to this world. And, what does that mean for our economy? And what does that mean for, you know, AI usage is always tricky. And like what you have is, at the same time, the same week, you're having stories that reaffirm that narrative, and it's
Hmm.
always one of those weird things. You don't want to like, if you start believing a story, you'll find all the data points that validate it. And I'm sure there's always other data points that dispel that. Like there is hiring in our economy and things of that nature. But you have this big company, Block, Jack Dorsey's company. For those who don't know, Jack Dorsey kind of famously started Twitter. This is this like new company. It's not even new. It's an old company. It used to be called Square. So if you ever go to a coffee shop or a food truck or something like that, like you probably have used Square and you've gotten Square receipts on your email. The company's now called Block because they made this big pivot to the blockchain, but people know it in the common world as Square. And they had 10,000 plus employees. They're laying off 44,000 of them, right? Pretty rapidly. So 40%. The one asterisk I would give is that if you hear that someone's going to reduce their workforce by 40%, you're thinking, at least I am, like, this is going to go back to like your employee headcount like 10, 15 years ago. And that's not the case. There's a whole narrative that they just probably overhired during COVID. And this reduction of 40% just takes them back to like late 2020 for where their headcount was. So it's not like a drastic reduction. There's also changes in things like, their name Block is tied to the blockchain. We're in this little bit of a semi-crypto winter. Like that could have an impact. But Jack Dorsey's long post, which is worth reading, just if you're interested in this, if you're interested in this topic, it's worth reading. Goes through why. And I think what's important is two things. One, he openly acknowledges that there's risk to this decision. So I don't think he's coming into this as like, this is clearly the 100% best path to go forward. We're going to do this. I think he's coming in from the perspective of he has strong convictions about the future of AI. And those strong convictions give him two options, right? Those strong convictions have him believe that efficiencies from AI are going to be very, very material. And then he has two options from there. One is they can gradually reduce their workforce over the next 2, 3, 4 years, or they can say, we're going to rip the bandage off right now. And we're going to adjust our workforce to match what we think the future of AI is going to be. That's going to put some pressure on our employees to adopt AI and implement it quicker and get us to that final destination quicker. Now, his answer is he chose option two, as we already noted, because if you do this gradual reduction of workforce, two things happen. One, it kills morale. Everyone's sitting there thinking like, when's the next quarterly layoff? How are we going to handle this, right? Even top performers are going to say at a company of 10,000 plus employees, how are they going to know I'm a top performer? How do I not just get displaced by a bot because a weird political issue in the organization or whatever it may be? So a lot of the top performers also leave. Like that is a really, really challenging place for your company to be at. And at the same time, you're not really doing anything to accelerate the adoption of AI within your organization because as an employee, the greater I adopt AI, the greater I accelerate it within my organization, the greater or quicker that reduction workforce is going to happen. And that's like, why do I want to contribute to that and potentially like lay myself off, right? So he decided that the best thing to do was just, rip the bandage off, do it all at once, and to be seen how it all turns out. But I understand the argument. If you're in HR today and you think about the challenges, doing what he's doing doesn't seem crazy, strictly for the morale perspective, trying to get AI to be adopted quickly, and so forth.
Yeah, I mean, when you think about the post that Jack Dorsey put out there on X, and I completely agree, worth the read. There's a few things that stood out. Certainly, the options that he had in front of him, the risks that you mentioned. This one section where he's talking about how he's seeing that the intelligence tools we're creating and using, paired with smaller and flatter teams, are enabling a new way of working, which fundamentally changes what it means to build and run a company. So that is again the nugget that stood out to me from just an HR and team structure standpoint. That it's probably a little column A, little column B when it comes to, yes, I'm sure some of those things are true where you are able to run companies on a flatter, leaner, more efficient basis. But at the same time, there was probably some overhiring that took place, and this is a workforce rationalization that was a long time coming, and it's delivered. The news is being delivered through this kind of uh, lens of efficiency and use of intelligence tools, which obviously makes that medicine go down a lot easier for the market, because again, Block's stock responded pretty favorably to this. Certainly not to those 4,000 workers who are now in a position like a lot of others in the tech industry of looking for their next opportunity. But I think when it comes to how do we interpret this again across other industries, outside of this very narrow focus on tech, specifically those who are highly motivated and deeply ingrained from a commercial standpoint in the the world of AI. What does it mean for folks who again are in positions in HR, might be thinking about performance review structures or ways to accelerate the adoption of AI within their company. And any kind of parting words of wisdom for folks in those types of roles?
Yeah, it's interesting. I think just think about news stories that broke last week, right? I saw an article or the headline around like Accenture, the big consulting firm, was going to consider AI usage in your promotion. And so I think the term they're using is like people who are not on board with the AI train may risk promotion, right? And I'm sure there's probably more detail internally to HR, I hope, distributed about what that means, because that's like a really vague idea. But then, more famously, I think this has been happening, months and months ago. So it's an old story, but Facebook or Meta, and they're a little bit unique in the sense they have their own LLM model, and so they have an incentive to get people to use that model. So there's a little bit of like, it's a little bit different than a traditional company, but they're effectively telling employees that for this bonus year, 2026, your use of internal AI tools will be a factor in your performance review, which will be a factor in your bonus that you receive, right? So imagine a bunch of Meta employees are going to up their usage of these tools, which is beneficial to Meta for a lot of different reasons. But I just think it's interesting. Like, if I were in HR, I would say you're probably going to want to comp on performance. And look, in this world today, the top performer likely is using AI in some way, I would think. If not, they're just like a rock star who's just like completely against it or something. But in the day, if you have two people performing equally well, they probably should be comped similarly, even if one is using AI more than the other. Now, what I would take from the HR perspective is like, if you have someone who's performing just as good as someone else who's using AI, that person has a really high ceiling. So you probably should do some coaching through the manager, et cetera, saying, how can we make you incrementally or materially better in terms of your contribution by encouraging you and supporting you in AI usage in such a way that you're now going to be, way ahead of that other person who's kind of in that same revenue or kind of bonus tier as you are, right? Likewise, if you want to accelerate AI adoption, the way you probably do it is just educate, evangelize, really promote success stories within your company for how people have done that. And those success stories could be like, this individual, was a content writer and they were producing X pieces of content every month. But with AI, they double that production. As a result, we were able to pay them more. They were able to contribute to the company more. They got promoted. If you share stories like that internally, I think that is a way to, in a more friendly kind of perspective, get companies or get employees to adopt AI in the way you would like them to do that.
Yeah. That's excellent guidance, and I think a great place to wrap for today. Thanks, as always, for those who tuned in. As a reminder, you can subscribe to Wellable Weekly newsletter and then this podcast on Spotify, Apple Podcasts, wherever you get your podcasts. Thanks, all.